Joining me for today's Options Insight is Max Breier. He's senior equity derivatives trader at BMO Capital. And, of course, we are seeing stocks rally off of this. We are seeing the VIX come in a little bit, which those two things tend to go together.
Yes, they do.
But you and I were just talking during the break that little else really seems to have... In other words, we haven't seen, on the options side of things, any sort of big shifts in the wake of Janet Yellen's commentary.
This is true. The FOMC statement was very much in line with expectations. The market hasn't changed that much other than there's a little bit more certainty that the Fed wants to raise rates very gradually.
Right.
The dots have come in a little bit.
Yeah.
And vol has fallen because some of that uncertainty has been removed from the market. So other than that, the story remains quite the same.
Now, one of the groups that has been sort of very vulnerable or sensitive to the perception about the increase in rates, sometimes benefiting from it, has been the financials.
Yes.
And you were talking to me about a trade that you noticed in the XLF, which is the financial ETF.
Right. So today someone sold a large block of calls against stock. And really, it's a bet on vol, lower vol in the financials.
Interesting.
I think that the dots coming in and the more gradual pace of rate increases now expected by the market means that the financials may not benefit as much as people thought before from the rising yield curve.
Now, while everybody's talking about the Fed, you're still looking at Greece, of course, which has not gone away. And you are an optimist on Greece. It's adorable, Max.
Thank you.
Just kidding. There aren't too many out there anymore, it doesn't seem like, right?
Some people still believe in fairy tales, I guess,
Yeah.
right? So, yes.
So what are you thinking is going to happen on the Greek front?
I mean, the posturing has been relentless from both sides. So I think they both want to wring as many concessions from one another as they possibly can. But in the end, I think it's likely that a deal gets done in the 11th hour.
Okay, so what trade do you put on to benefit from that view?
Right, so under that premise, you can put on a time spread. You can sell a June 26 call, buy a July 2nd call in one of the European ETFs. I happen to like HEDJ because it's hedged against the euro. Buy that 1 week forward volatility and capture the likelihood that an 11th hour deal gets done.
Okay,
right
explain to me exactly how that trade works.
Right, so June 30th is the deadline for Greek to make a repayment to the IMF. If they cut a deal on June 29th, then that trade, the option that you're short will have already expired. You'll still be sitting long a July 2nd option that will benefit from Europe basically rallying on a deal getting done.
And what's your downside then if you're wrong and the deal does get done at the last minute?
The premium you pay up front. So it does cost money up front. The 64 call calendar in HEDJ costs about 25 cents. That's your risk, that you lose that 25-cent premium.
Okay.
Yeah.
Very interesting. We'll see what happens on Greece. I'm going to hold you to... This is one of those I'm curious to follow up with you on.
We'll keep our fingers crossed.
Okay, Max Breier, BMO. Thank you so much.
Thanks.
Appreciate it.